Used car prices are on the decline, falling around 10% from a year ago. That's according to a report.
If you are a car enthusiast or someone looking to buy a car, you must have noticed the crazy price tags on automobiles. Well, there is a piece of good news for you. Car prices will see a steep decline over the coming months. Without further waiting, let us take a look at why car prices are falling. Before the pandemic, average car prices were around $38,960. You must have noticed prices going up in a matter of days after the pandemic. There was a global chip shortage and a rise in inflation, which caused prices to go through the roof. Average car prices in 2021 were reported to be around $47,077. Now, to your relief, things have changed. The chip shortage crisis is residing. Moreover, there is an oversupply of cars in various segments and less demand. Expert analysis suggests that this is just the beginning of a huge upcoming crash, and more vehicles are said to lose value over the period. The softening of car prices is spreading across all segments. Whole car prices decreased by almost 3% compared to the previous year. Prices for luxury cars and hatchbacks dropped an average of around 11%. Vans and pickups have a slight change of about 4.5%, the lowest among the categories due to the constant demand from transportation and supply chain companies. As you imagined, sports car prices have a steep decline. People interested in sports cars are coming downwards due to reliability issues and high maintenance costs. EVs are just behind sports cars, seeing the biggest price declines since the start of the year. Overall, the decline in EV prices was a key factor in worldwide price moderation. The average price of EVs came down to $53,400 from $61,000 at the start of the year. Yahoo Finance reported that global car production would exceed sales by almost 6%, leaving 5 million excess vehicles requiring huge price cuts to sell off the lawn. You must have noticed dealerships flooded with their newer models in recent times. JP Morgan analysts predict that car prices will fall around 2.5 to 5% for newer models and around 10% for used cars. Commodities essential in car production, such as rubber and stainless steel, are experiencing a slight decline. According to JP Morgan researchers' weighted index of the commodities used to produce an automobile, costs may average 24% lower in 2023 compared with 2022. Auto sales are being hampered by record new vehicle pricing, declining used vehicle trade-in values, and higher interest rates, which are together negatively impacting affordability, said Ryan Brinkman, an analyst in JP Morgan Auto Parts Research. People are trading used cars at lower prices than before. Most people prefer using used cars because of their affordability and cheap maintenance. Used car prices of sedans and hatchbacks slightly decreased, while luxury cars declined. Analysts are projecting that decline in prices for used high-end cars will continue. Software company Cox Automotive reported a further 1% fall in used car prices this year. Car makers are pushing out lower-end models equipped with fewer high-end features. This is due to their higher profit margins and less production costs in these models. People prefer models with high-end features and more safety. Dealerships are flooded with inventories full of cars, and they need to clear their stock by the end of the year. Recent reports show the new vehicle inventory was 1.95 million at the end of June, which is an increase of 1.75 million from January. Kelley Blue's book reports that it would take around 103 days for the total inventories of EVs in the US to sell. Previous year things were the opposite, where the inventories were less and there was a huge demand. But now the demand is almost down 50% compared to 2022. Before a year, car prices surged 10 to 20% with no inventories in place. Due to higher competition among car manufacturers and dealers, a major price cut will happen in the coming days. Many dealers offer huge discounts, incentives, and free customers for the newer models to entice consumers. They must clear inventories to reach break-even. According to data from Edmunds, newer cars are selling around $600 below the retail price on average. In contrast, the situation varies by brand. The overall trend remains the same. Many first-time car buyers were able to strike amazing deals due to this. Tesla has reduced prices up to $7,166 for their selected models. Tesla's most recent price cuts will be a warning for rival manufacturers of electric vehicles, said the chief executive officer of Renault, a French car maker. It will force major car brands to look into their pricing policy worldwide. Tesla's rivals Kia and Lucid have also started to cut prices amid competitor pricing. Second, the luxury car brand Land Rover is on the list, where almost $6,885 was reduced, followed by Lincoln and Volvo. At the same time, Chinese car brand NIO cut almost $4,200 and is giving free battery swaps for new customers. Famous car brand Toyota cut prices of the latest BZ X4 by almost $4,500 in China, followed by Nissan cutting around a massive $9,000 for its newer model, Ariya. Many people prefer to keep their current car and are not looking for a replacement soon. One of the main reasons is that no major changes or technology updates have occurred in the car industry. People are not willing to spend money on expensive products due to the rising inflation and high living costs in major cities. This summer, buyers can expect to see a decline in car prices, said Adam Taggart, CEO of Wealthion. He also mentioned that supply chain issues are not really a factor anymore. Car dealers have to work harder to move their products. He also mentioned that even if car companies don't drop prices by 10%, you can still see prices cuts from luxury car brands. Soaring gas prices and interest rates are making car ownership more troublesome and putting a stop to auto sales. Interest rates have been going through the roof in the past few months. Gas prices have also reached an all-time high. People are not willing to pay interest rates in these tough economic situations. Conversely, some people are taking out loans with higher interest rates to buy newer models. To your surprise, the average monthly payment reached a record high of $783, reports auto site Edmunds. Around 78% of households rely on cars for their daily commute. 74% are willing to make trade-offs to cars. People with an average income between $4,800 and $70,000 are taking out huge loans to buy cars. This will lead to negative debt. People living on paychecks must cut out their quality of life to get a vehicle. You are going to have a large chunk of people with loan payments for 4 figures, Tom Operator of Automatic Consulting. Should you buy a new car now? Well, not now exactly, Taggart said. Patience will work in your favor here. If you can wait before buying, late 2023 and early 2024 should reveal substantially better value versus today's prices, he said. Do your homework and shortlist a few cars from your favorite brands. Call around dealerships and get an idea of car prices. You will know better what price to pay and can bargain a deal with the dealership. Look for dealerships with lots of cars in them. That means they need to move the inventories faster. When seeing an empty lot, don't assume there is a shortage. Some dealers store their inventories off-site to make demand look higher. Several US brands are willing to offer more discounts than foreign brands right now, Taggart mentioned. Car prices will see a huge price drop in the coming months. If you plan on buying a new car, take a look at nearby dealerships that offer discounts or strike a deal with them. The situation will continue to get worse. The less demand for cars, high interest rates and high inventories will be the main reason. What are your thoughts on current car prices? Let us know in the comment section below. Like, share, subscribe, and turn on the bell notification to get out the latest videos. See you next time.